Hello and welcome to Bazaar Morning Call. I'm Prashant. With me, my colleagues Sonia and Reema is with us on the show as well. Guys, hi. Good morning. Starting a new week. Who was up watching the match? That's what I want to know.
You know, on days when they have such fabulous matches, the next day has to be a holiday. I mean, it's not possible, and it was exhilarating.
Did you watch it? Did any
yes, I did. I stayed
all
up.
the way?
Not through the way, but you know, the first part. I mean, it was exhilarating. There was no other way to explain it.
I saw the highlights in the morning. As soon as I woke up at 5 a.m.,
I did neither, but I plan to stay up today for the second semi-final, and hopefully that should be good. So
you know, the thing is that I mean, when this is of course Messi's last World Cup, right?
Yeah.
And the way he performed is mesmerizing.
Yeah.
They call him the magic man right now, literally.
But I felt a little bad for Croatia just because of the way they've performed in this World Cup. I mean, but you know, there are some games, like I said, the next day has to be a holiday so that you can catch some of these games.
If you see me all groggy tomorrow morning, you know what I did, right? There is, of course, the FOMC as well. So, I mean, later today, so I could be up for either the FOMC or for the second semi-final. But let's just quickly run you through the top stuff that I think one needs to watch out for. So, we had a very large equity rally last night. But by close, I mean, if you looked at the market in the US at about 9:30 our time, you would have found the S&P 500, the NASDAQ all up between 3 and 4%. You woke up this morning, barely 1% gains. I mean, actually, the NASDAQ is up 1, the S&P is up 0.75%. So what happened? I mean, before that, I mean, you had the CPI numbers, right? Before the market started rallying, you had the CPI numbers which came and they are slower for the second straight month. Second meaningful kind of slowdown we've seen. October was off. S&P that day rallied 5.5%. Of course, then did nothing for the next 1 month all the way till now. And then you had the November CPI last night, which has also shown that it's softer than expected, which is good news. Markets rallied, but they gave up gains. And that may be because the market got some pre-FOMC jitters. The FOMC is today, tonight, and you'll hear from Fed Chair Powell as well. Market pricing, by the way, is not changed. That is still 50 basis point hike. It's pricing for this month. There was also an article from the WSJ economics reporter who's kind of called the Fed Whisperer. He said that, the softer November CPI will not change very much. I think market took note of that as well. The risk is this, right? The risk is that in the press conference, you'll get the hike, but the risk is if the Fed chair does not endorse the market's dovish view, that there will be another downshift in the pace of hikes and then eventually there will be a pause. There will be, I mean, if you go by market pricing, there are cuts in 2023. What if the Fed chair pushes back against it? I think that is a risk which the market did not want to take. And I want to make this point that I think it is very good that the market is going into the FOMC not with 4% rallies. It's going with 1% kind of a move. It's a normal market move. And then, I mean, if you get a dovish kind of dovish commentary tonight, I think the rally then could be a little more durable and not like what we saw when the market rallied 5.5% on the 10th of November, one month ago, when the October CPI number in the US was soft. And then, I mean, the index did not do anything for the next 1 month all the way till today. So I would say this is not bad news. On the Nifty, we saw a very large rally. The index ended 100 points higher. And I think if you're looking at upsides, it's clearly last Friday's high. By the way, it's also the second touch point on a downward sloping. It's a small trend line, downward sloping channel. It coincides with Friday's high, which is 18,665. That's the first level to take out on the upside. It's about 60 points away. The 20-day perhaps should provide some support. That's also moved up as of yesterday's close. That stands at about 18,514. I mean, as we've been saying, no point chasing moves if the market opens, in a very significantly positive way. Better to wait for dips. On the Bank Nifty, which clearly is the stronger of the two indices, I think, and by the way, that's a new all-time high. The support lies at 43,582. And of course, in this space, the PSU Bank Index is what is really attracting all of the attention. Huge, wild moves, and I think we'll discuss more on that in a bit from now. Guys, hi.
Hi, and it's going to be a very strong start to trade, right? I mean, the SGX Nifty is now up over 100 points. What really stood out for me is the FI buying, which has come back after 6 days of selling, and gross buying has also picked up substantially. So yesterday there was FIs buying about 620 odd crores, and the gross buying on an average daily gross buying has now risen to 9,600 crores, versus about 7,000 crores in the last 6 sessions. So FIs are coming back. This is the highest buying that we've seen in December so far. So that's the big positive for me. The other thing, of course, all eyes will be on the US FOMC, but I guess the US Fed will now be one step closer to halting interest rate hikes after the cooling off of inflation. That's the interpretation that most market men have made, and that leads us to the question of whether the Nifty breaks out of this range, 18,400 to 18,800. Is this ammunition enough for the Nifty to break out of this range? Just a couple of more things. Brent crude is now back above $80 a barrel. So the dollar has slumped because of slowing inflation. So just keep an eye out on that internal. And in terms of corporate action, I'm going to be watching out for Paytm very closely. There could be a bit of a disappointment after the amount of the buyback was announced yesterday to the tune of 850 crores. More on that in a bit, but the market will now look ahead and look more at earnings and whether there is any sustainable pickup in the earnings trajectory for Paytm. So lots to talk about today, but I think the headline is that the market is going to score a big goal, similar to what perhaps Argentina did yesterday. But what are you tracking this morning?
Well, just to underscore that point about the FI flows turning. Last week, the FI outflows or the selling in the cash market was more than 1,000 crores. That dwindled down to a sell figure of about 150 odd crores over the last 2 trading sessions. And yesterday, we had an inflow of 620 crores. So that's a big positive. The FI flows have turned decisively. Also, remember, this is the last big week of economic data. Today, in the Indian markets, we'll watch the WPI at 12 p.m., then the FOMC decision at 11:30 p.m., and then tomorrow it will be the Bank of England and the ECB decision. But after that, it's going to be very quiet into the year, and in terms of news flow, no big macroeconomic data is awaited. And in terms of stocks and sectors to watch, do watch out for IT. IT showed a rebound yesterday after 7 days of selling. Yesterday as well, NASDAQ was up close to about 1%, so there could be the rub-off impact in IT. And even the Infosys as well as Wipro ADR, both of them were up about 1 to 2%. Some rally fizzled by the close of trade for the ADRs in the US, but there could be the rub-off impact in Indian IT, and that rally could extend itself.
Also in the F&O space, there's a lot of action in the Nifty Bank as well, and the Nifty Bank once again hit a record high yesterday. So do keep an eye out on that. Let's get you some market opinion as well. First up, a view coming in from Eric Fishwick of CLSA, who says that the US inflation was lower than expected. However, there is nothing here to dissuade the Fed from moving to a smaller tightening increment. He also does not think that the data means that the Fed will stop in December or even in February. He expects more clarity in the Fed's guidance and Fed Chair Powell's press conference. As of now, CLSA is retaining a forecast of a terminal rate of 5.25%, with rates kept at this level to end 2023. Expectations for an early reversal of tightening strengthened after the inflation release, which according to Eric is excessive given the tone of the Fed's commentary thus far.
Let's get you some money market views then. On the rupee, Kunal Sudhani of Shinhan Bank says the dollar index and the US Treasury yields dropped on the back of the US CPI coming in below expectations. Oil has moved higher with the OPEC trimming its forecast for demand. Also, Fed policy is due today with expectations of a 50 basis points rate hike. But the tone for the coming policies remain important to watch after lower CPI for November. For the rupee, Kunal says 82.15 acts as a support, while 82.75 is the resistance.
And on the bonds, Neeraj Gambhir of Axis Bank says the market traded in a narrow range of 7.25 to 7.32% despite a slightly hawkish MPC and better than expected inflation print. For the rest of the week, the US CPI and FOMC will give further guidance to the rate trajectory. For the week, the benchmark 10-year yield is expected to trade in a range of 7.2 to 7.35%.
Okay, we have lots of stock-specific action to track today, and we'll get to it in just a bit in our special Top 10 segment. The stocks we'll be talking about are Paytm, Bank of Baroda, TVS Motor, IFB Industries, Patel Engineering, Ultratech Cement, and Adani Transmission. These are, of course, things we're watching on the back of positive news flow. And Bayer Crop Science, IIFL Wealth Management, and Reliance Infrastructure are stocks which we will watch on the other side in terms of negative news flow as well.